back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here we have our Bitcoin 4-hour chart, and just got some moving averages pulled up with the SAR in green and red, and then our pivots highlighted in purple and blue down here. And essentially we're at like a key point in the market where, we're basically deciding, are we going to break to the downside and continue like this, corrective phase, or are we going to continue up from our head and shoulders that we got way down here? And what it's looking like to me is if we put, I'm going to turn off the moving averages for a minute, and then, turn off the moving averages and everything for a minute, and then just put back on like the drawing tools. And it sort of looks like we just got a truncated fifth wave. So if you see, we got like 1, 2 correction, 3, 4 correction, and then 5, and now we're coming down to correct the fifth wave. And if we break it down, to each one of these individual waves, we basically, for this first wave, we came down and corrected to a 618. At first, we came down to 382.5 almost. I'm going to take that off. And then for the third wave, we were more bullish, so we only came down to the 382. So we had 618, and then we had 382. And now for this fifth wave, it looked like it was going to end right here and then continued on up. And so far, we've come down exactly to the 0.5. So is it possible now that we continue to move the upside and go? Yeah, definitely. But for like Elliott wave theory, that's saying that we just completed and that we're going to correct now. So the way we'll know that, obviously this is wrong and we're not done with this wave yet, the way we'll know is if we come back up here and take out the high, obviously, of the entire run so far. So, that'll be very clear, obviously. But we tried one time to bounce. Now what I'm looking at here is, in yellow is the fib for just this wave, for our wave 5. And we tried once already to bounce that 0.5 down here. We tried first to bounce the 382, and we got that massive move up. And then we came down and tagged the 0.5. Now we're trying to move up here. So, what I would expect to happen is for us to come up and put in another lower high, and then we could correct down to like a legitimate correction. Because the difference is, are we correcting just wave 5 right here, or is this entire like 5-wave structure done, and now we're going to correct this entire 5-wave structure, which the entire 5-wave structure is in green right here. So if that's the case, I would expect us basically to come down here, and then come down again and put in like either a 382.5 or a 618 retracement in green right here. So basically, I know that's a huge range right now, but basically just to highlight it, this is the 382 to the 618. That's the golden retrace zone for this entire 5-wave structure. Now again, we could bounce right here and continue moving to the upside, and that's it. And this structure is not finished and ready to retrace, or we could get a shallow retracement if the market's extremely bullish. That's not uncommon. So the real question is, essentially is, are we going to just correct this wave 5 and continue moving to the upside, and this structure is not finished? Or, for those people that do follow Elliott wave, was that just a truncated wave 5? We're done now, and then we're going to come back down and correct. And, another way that you can tell this is, and it's very common, is you measure like the actual wave itself and see like how much it was. That one was 1300, and then we can measure wave 2. Wave 2 was 2375, and then wave 5 was 2347. So 3 and 5 are basically exactly the same length almost, and it's typical that you'll get 2 like almost exactly the same length. So yeah, it is possible we come back up here and continue moving, but the way this retracement looks and everything, it looks like this type of retracement. We basically got the exact same retracement from here, and then that strong bounce right there, but it got rejected. And that's what to me looks like a change in market structure. This didn't look like a change in structure. We came down here, we bounced that support line, we bounced the key fib area, but the failure to put in the new high, see when we bounced it right here, we came up, got a shallow retracement off of it, retested, breakout for resistance, and then moved to a new high. That's not what happened right here. We got that, what would have been the 382 retracement and bounce up here, and then when we got rejected, we came back down to a new low, like a strong rejection. And that, to me, that kind of candle, and that kind of selling, and that kind of volume, that tells me, like, change in market structure. We broke through then a key support that we've been using since the bottom right here, and that's like our parabolic trend line for the entire move. And then this one was just a parabolic trend line for like this wave. So once we broke through that, we were bearish on the entire structure. So then when it breaks through right there, and we get that bounce up here, we don't expect it to get past that parabolic trend line. And then again, we break down here through the next parabolic trend line and come down. Didn't quite make it to the yellow one yet, which just comes from the bottom too. Didn't quite make it down there, but when we broke through this blue parabolic trend line here, we expect it not to come above that line. So we did. We came all the way up, and then like we're consolidating here, looking for another push up to the top, and we could easily push all the way back up here to like that 10-2 range and trap people back in the position, but not be able to break above like this consolidation here, and then put in a lower high, and then come back down. Like I said, sell back off to the next level. And I have this red in here roughly. Excuse me. I have the red in here roughly to show like the 618 zone for that retracement down to the 886, but realistically that's for the yellow here, that's for this wave from here to here, just wave 5, okay? But the orange, or I'm sorry, the green is for the entire structure itself and shows the retracement coming down. So that would give us in green the retracement of the golden zone right here. So anywhere in there I would expect to be a respectable bullish retracement and then continuation to the upside. So if we came down here and put that in, I would, and then got a powerful move, it's possible we can move straight up off of that. But at this point in time, seeing that massive candle come in and that sell-off, and also this is our moving average crosses on the 4-hour. So I'm going to turn all this back off now. Turn these moving averages back on. And if you look at the moving average crosses on the 4-hour between our short time frame in red and our longer time frame in yellow, and you just look at every one of those crosses, each one of them was like a shortening cross. This one we like basically save the cross right after it cross, get the move up, it sells off, crosses back over, we get the cross, but it's just enough to get over, and then we get a massive sell-off. And now here we've got the cross again, and I would expect it to be the same type of situation where we get the cross, and then we get like a rejection candle like this, we get another attempt to the upside to take out the highs, and get that liquidity grab, so come all the way up to like that 10-1 range, somewhere in that area, and then sell back off. And come back down at least to retest the 200 or one of these key fib levels. But what I think is more likely to happen is we're going to come down to like that 9,000 range or one of these other key Fibonacci's. I mean, we already touched the 0.5 exactly off of that. And if you look at the red, that's a key level. So, there's a lot of stuff in confluence here with all these different fib levels. It's just about how bullish the market is. And, at this point in time, looking at it, it looks on the shorter time frames like we're going to get a legitimate retracement here. It doesn't mean we're going to compromise the overall trend, but that's what it looks like to me. So we'll see what happens on the daily. We defended the cross like pretty good right here, as where in the past when we came over, we basically just dumped underneath it and sold off. So that push up here was key. But we'll see now, basically on the daily, we've got 6 hours left. Where is this going to close at? Is it going to close up here and then get a massive dump sell-off like that? Is it going to close below the short time frame or, the longer of the two short time frames? Anything like that could happen right now. So we could get a sell-off all the way back down to like 9,700 in the next like 6 hours before the end of the day, and that's going to change the scope so much. So just keep your eyes out. I'm looking for like some crazy volatility in the next basically 6 to 12 hours. Going to be a great time for trading, and I'll be back with my usual Sunday night weekly close video as well. But there's just so much going on right now, and I don't know what's going to happen here during the day. But there's definitely a possibility we're going to get like a continued violent sell-off. But we'll see, because again, we're looking at a situation where we had a huge price movement, over the weekend, and that's not necessarily a good thing. We usually see like continued volatility, then a lot of times in the opposite direction. So, crypto trend trader, daily update on Bitcoin. I'll be back tonight, and I'm signing off.
Wow, that was our video from February 23rd. And man, just to tell you the truth, we just absolutely nailed it. And like I said, at some point in time, it's going to be very clear that we're not just correcting this fifth wave right here, and we are in fact correcting the entire 5-wave structure. So the fifth wave correction initially came down here in the yellow fibs, and when it bounced at 0.5 and came up, that's where we had made the video right here, and I expected one more stab higher. I said up to 10.1, and we got up to 10,038. And at 10,038, we got the violent sell-off. This is where we got the cross on the daily between the short and the short-term two moving averages. And from that point on, we entered a daily downtrend. So this is where we entered the daily uptrend. This is where we entered the daily downtrend. So like I was saying in our previous videos over basically like the last month, especially in the last couple weeks, essentially what we were expecting to happen was we were very close to flipping over our longer term time frames to like the bullish case again, like the weekly essentially, because the weekly was still looking like bearish to us. Well, here we did. We came up on the daily and we failed, and now essentially we're selling off and getting this violent retracement. And now it's very clear now that we've blown through essentially like the yellow right here was that fifth wave, and we took out the low of that fifth wave with this last little sell-off right there. So people are asking for videos every day and everything, and it's like, look, you don't need my videos every day. You need to go back and watch my old videos. You need to re-watch videos you've already watched and learn from them. Learn how I'm determining these things and how I'm making these determinations. Okay, we're entering a downtrend. Okay, we're entering an uptrend. This is a key level. This is a deciding area in the market, etc. These videos are made not only just for you to be able to watch one time. They're made for you to be able to watch and learn from. I don't use a ton of profanities. I don't change indicators every day. I use the same strategies and the same techniques constantly, consistently. I put the same TA out. I don't mix it up. I'm not discovering new things. I do continue to learn. Okay, I always continue to learn. But people that are discovering new things and altering this, that, and the other, and finding this, and this is the new thing, and this has never happened before, like, all that is junk. It's all trash. It's all clickbait. It's the same thing as like cussing and swearing and acting crazy and all that. It's just like a way to create like personality, to interest people, to create like content. There's no actual value to it. Like, come in here and learn what I'm doing and how I'm doing it, and then one day you don't even have to watch my videos anymore. You have my indicators, you have my techniques. You don't need any kind of advice. You don't need any kind of, reaffirmation. You don't need to like sit here while I'm on a live stream like telling you like we're going to the moon. Like, no, you can look at these charts and you can use the technical analysis that you've learned here and through books and in other places. You'll be able to tell for yourself what TA is valid and what is junk. Because if there's one thing I know, it's that when someone knows more about a topic than you do and they're telling you stuff, it's hard to determine if they're actually telling you correct things or if they just know more than you, so it seems correct because they know more about that topic than you do. Because that's what happens a lot of times in this space, and sometimes it can take years to learn, like to get to that level, because people have been involved in something for years already. So to even determine like if they're full of it or not, or if it's valid. So you need to look back at these old videos and stuff like that and look back at people's TA, and you can determine for yourself like, okay, is this person legitimate or not? So